A multi-billion-dollar tsunami is crashing into Bitcoin, but on the surface, the market is eerily calm. Too calm. While the price of the world's leading digital asset seems to be taking a nap, consolidating in a narrow, almost sleepy range, the biggest players on Wall Street are secretly orchestrating one of the largest capital inflows in recent history. This is not just a market trend. It's a paradox that has seasoned analysts on the edge of their seats. A silent, raging river of institutional money flowing directly into Bitcoin, completely hidden behind a curtain of price stability. What on earth is actually going on? What does Wall Street know that the average investor doesn't? Today, we are decoding Bitcoin's next colossal move. We will pull back that curtain and expose the staggering exchange-traded fund, or ETF, numbers that financial giants are quietly piling up week after week. We will explore the bombshell reasons, straight from the world's largest asset manager, BlackRock, explaining why their wealthiest clients are now treating Bitcoin as an essential safe haven in a world riddled with uncertainty. And most critically, we will analyze the powerful technical signals on the price chart that are practically screaming a massive, violent breakout is not just possible, but imminent. A breakout that could send Bitcoin smashing through its all-time high of $123,000 and rocketing towards $125,000. Is this the deep, quiet breath before the plunge? Let's dive deep and find out. The story begins with the numbers, and these numbers are nothing short of breathtaking. We must understand the sheer scale of what's happening. Forget a trickle of new investment. What we are witnessing is a tidal wave of capital. The latest data from SoSoValue shows that in just 1 week, spot Bitcoin ETFs absorbed over $2.3 billion in fresh inflows. To put that into perspective, that's more than the entire budget for a Hollywood blockbuster franchise, flowing into a single asset class in just 5 trading days. This wasn't an anomaly or a one-off event. It was the 6th consecutive week of this relentless buying pressure. The week prior, the inflow was even larger, at a staggering $2.7 billion. This isn't retail FOMO driving the price up in a frenzy. This is a calculated, persistent, and large-scale acquisition campaign by the smartest money on the planet. And the undisputed king of this campaign is BlackRock's IBIT. The fund now holds over $86 billion in assets under management. This is a monumental figure that changes the entire conversation. It has catapulted IBIT into becoming the 8th largest and most profitable fund in BlackRock's entire global portfolio. Think about that. Out of thousands of funds managing trillions of dollars across every conceivable asset, a Bitcoin ETF, which didn't even exist a short while ago, has become a flagship product for the world's largest asset manager. This signals a tectonic shift within the walls of institutional finance. Not far behind, Fidelity's FBTC fund holds over $24 billion, while Grayscale's GBTC, the original titan that has weathered significant outflows, has stabilized and still commands over $21 billion. Combined, we are talking about a war chest of well over $130 billion held in just these top 3 funds alone, a figure that is growing with each passing week. This is Wall Street voting with its checkbook, and the vote is a deafening, unanimous yes for Bitcoin. But this raises the most important question of all. Why? Why now? Why is Wall Street, historically a fierce crypto skeptic, now embracing Bitcoin with such fervor? For the answer, we need to look no further than BlackRock itself. The asset manager has been surprisingly transparent about the motivations of its institutional clients, and the reasons are a cocktail of ambition and fear. First and foremost, it's about raw performance. According to BlackRock, these investors, who manage pensions, endowments, and vast corporate treasuries, are looking at Bitcoin's long, undeniable track record of outperforming traditional assets like stocks and bonds. They are chasing returns in a world where traditional growth is becoming harder to find. But the story goes much deeper than simple profit-seeking. It's also a story of self-preservation. It's a story of fear and a desperate search for safety. BlackRock has explicitly pointed to the surging United States public debt, a number that spirals ever higher with no end in sight, creating profound long-term uncertainty about the value of the dollar itself. Their clients see the relentless debasement of fiat currency and are looking for an escape. They see Bitcoin, with its mathematically guaranteed fixed supply of 21 million coins, as a digital life raft in a sea of endless money printing. They are using it as a hard, provably scarce hedge against the very real threat of inflation, which silently erodes the purchasing power of their vast cash holdings year after year. Add to this the escalating geopolitical risks around the globe, trade wars, regional conflicts, and shifting global alliances, and you have a perfect storm of uncertainty. In this environment, Wall Street is no longer viewing Bitcoin as a speculative gamble. It's viewing it as a strategic necessity, a non-sovereign store of value that exists outside the control of any single government or central bank. This is a profound, almost revolutionary shift in thinking. The smartest money in the room is making a very clear bet on the future of finance. If you're finding this breakdown of Wall Street's core strategy as mind-blowing as we do us a favor and hit that like button. It's a huge signal to us that you appreciate these deep dives and want to see more. Just as this financial tsunami was building, a series of political developments arrived to add even more fuel to the fire, potentially turning this wave into a Category 5 hurricane. In a landmark move, the United States Congress voted for the Genius Act, which was promptly signed into law on Friday. This act isn't about restriction, it's about clarity. It introduces a clear set of guardrails that all US dollar-backed stablecoins must follow. This includes regular, transparent audits and public disclosures about the reserves backing them. Why is this so incredibly bullish? Because for years, the shadow of regulatory uncertainty has kept trillions of institutional dollars on the sidelines. The compliance and risk management departments at major financial institutions simply couldn't approve investments into an ecosystem perceived as a lawless Wild West. The Genius Act provides the regulatory green light, the official stamp of approval that big money has been waiting for. It builds a foundation of trust and legitimacy, making the crypto ecosystem a much safer and more attractive playground for large-scale investment. But the even bigger bombshell came from reports swirling around a potential policy shift from the Trump administration. According to insiders, the former president is seriously considering allowing retirement funds to allocate a portion of their capital into cryptocurrencies. This cannot be overstated. We're talking about unlocking a pool of over $9 trillion. Let that number sink in for a moment. $9 trillion. Even a tiny 1% allocation from these retirement funds would unleash a $90 billion flood of new money into the crypto industry, an amount that would dwarf the already impressive ETF inflows we've seen so far. It would be the single largest capital injection event in the history of digital assets, fundamentally reshaping the market for generations to come by creating a constant, structural demand for a fixed supply asset. With this unprecedented confluence of institutional capital and political tailwinds, all eyes turn to the price chart. What is the technical story being told amidst all this fundamental news? This is where things get incredibly exciting for traders and investors alike. The daily chart for Bitcoin shows a clear picture of immense, underlying strength. The price recently staged a powerful bullish breakout, shattering previous resistance levels and soaring to its current all-time high of $123,000. This breakout wasn't random. It was the culmination of months of bullish consolidation patterns, where buyers systematically absorbed every attempt by sellers to push the price down. We saw the formation and successful completion of an inverse head and shoulders pattern, a classic sign of a bottoming market where sellers lose their power, followed by a classic cup and handle, and a bullish flag. All of these are textbook signals that pointed towards a major upward move. Now, after that explosive surge, the price has lost some momentum and is consolidating, but this is where the most compelling signal emerges. Bitcoin has formed what technical analysts call a bullish pennant. Imagine a rocket ship after its initial stage burn. It pauses for a moment, coasts, and gathers immense energy before the next, even more powerful stage ignites. That's a bullish pennant. It consists of the sharp, vertical price surge, the flagpole, followed by a period of tightening consolidation within a small, symmetrical triangle. This pattern represents a brief ceasefire in the battle between buyers and sellers, where sellers become exhausted and the overwhelmingly strong buying pressure that caused the initial surge begins to build again, coiling like a spring, ready to explode. The pressure inside this pennant is palpable. Supporting this outlook, the Bitcoin price remains firmly above both the 50-day and 100-day moving averages, key levels of support that show the underlying trend is powerfully positive. Furthermore, the super trend indicator, a popular tool for identifying trend direction, remains steadfastly green, refusing to flash any sign of a reversal. All the technical signs are pointing in one direction, up. So, what happens when we put all the pieces of this intricate puzzle together? On one side, we have an unprecedented, multi-billion-dollar weekly inflow from the world's most sophisticated financial institutions. They're buying Bitcoin not just for performance, but as a critical hedge against the structural failures of the traditional financial system. On the other side, we have major political catalysts on the horizon, from clarifying regulations that de-risk the asset class to the mind-boggling possibility of $9 trillion in retirement funds entering the market. And tying it all together is a perfectly formed bullish pennant on the price chart, a technical pattern that has historically preceded some of the most explosive upward moves in Bitcoin's history. The conclusion seems almost inescapable. This period of calm is not a sign of weakness. It is the sign of a market gathering immense strength for its next major leg up. The immediate target for the bulls is a retest of the all-time high at $123,000. A decisive break above that psychologically crucial level would likely trigger a cascade of liquidations for short sellers and a fresh wave of buying from trend followers and sidelined investors, potentially creating the momentum needed to catapult Bitcoin towards our next target of $125,000 and beyond. Are we witnessing the final, quiet moments before a historic financial storm? Is this the consolidation that kicks off a new crypto supercycle, one fueled not by retail mania, but by the colossal weight of institutional finance? The next few weeks could redefine the entire crypto landscape for years to come. You won't want to miss our updates as this incredible story unfolds. Make sure you are subscribed to the channel with notifications turned on, so you'll be the first to know when the breakout finally happens. What do you think is next for Bitcoin? Let us know your price prediction in the comments below.